You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back. It is Thursday, time to rock out with everyone's favorite bi-weekly source for all things options related. Yep, we're talking about the old OB. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been binging. Man, it's been a busy week on the network. I still have a voice, which is wild. Of course, a lot of the new shows popping off this week, including the European Market Brief. Check that out if you're intrigued by all things European derivatives. You got Thor coming at you, aka the Hot Options Report, every day after the closing bell. Now, a lot of fun stuff popping off, as well as our usual gamut of programming. Yesterday, we did a doubleheader of Options Boot Camp as well. So a lot of fun hitting the tape out there. If you're hanging out in the pro, theoptionsinsider.com/pro. You already have access to pretty much all of it. And if you want to get early access for yourselves, you want to get live streams, you want to get that pro podcast feed that is pretty darn cool, if I do say so myself. You want to get great giveaways, oddities, you want to get pro Q&As, all sorts of fun. theoptionsinsider.com/pro is the place to go to learn. Oh yeah, we also sat down with two of the big brokers in the space these days. Coinbase on the crypto side, even though they're trying to make a move into, let's say, the everything exchange, as they call it. And then, of course, the folks over there, Robinhood, what are they bringing to the table on the options front, I should say? Well, got to tune in to find out. All sorts of fun. As we go around the horn, see what kind of fun is in store for us on the show this week. You know, when I think fun and options, when I think of those two terms combined, I can think of one man only, and that is the Flowmaster himself, Mr. Henry Schwartz from Cboe. He is synonymous with fun. Mr. Flowmaster, welcome back to the show, sir.
Well, thank you, Mark. Happy to be here. At the marketing team at Cboe, they sometimes position me as the fun uncle of the options industry. so I'm going to go with that. And
Uncle Flowmaster, I like it. I like it.
Exactly. Things are good. I'm spending most of the week in upstate New York. Went to the Dutchess County Fair yesterday, where I saw lots of sheep and pigs and prize-winning produce and the like. But happy to be in the market today and with you and our listeners.
Were any fried Twinkies consumed? Inquiring minds want to know, sir.
We had some fried Oreos. There was a giant turkey leg. Exactly. And a foot-long corn dog. But I'll tell you, inflation is real because the foot-long corn dog was $10.
Oh, wow.
So
what's a fried Oreo go for these days? $5? $7.50?
I think about $7, yeah.
Wow. Jeez. One Oreo fried. That's
No, that's a pack. You get a 3-pack.
Oh, you get 3 Oreos. Oh, so a mere $2.50 an Oreo. What a wild man I am to suggest such things. Speaking of suggesting wild things, he calls himself the Uncle Flowmaster now, but we already have an uncle on the show, so we might have to have a bit of an uncle death match because we are joined once again by the uncleist of Mike's, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show. And what do you think of the Flowmaster? He's already got a title, and now he's coming for yours, sir.
Hey, I'm a lover, not a fighter, Mark. Quit trying to instigate death matches. We're all friends.
You know, anyone who's heard the 80s Trivia Challenge on Mondays knows that's a lie, sir.
No, not true at all.
We have brought
true at all.
We have brought out the heat and Uncle Mike on that segment. Let's see if we can do it again with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get down to business. And business is good out there on the street, especially if you like a little bit of red. So Uncle Mike may not like this portion of the show. Yes, of course, the Trading Block, the portion of the show where we tell you what's lighting up our tapes out there today. And it's another red day. It's been pretty much a red week for the major indices, which is at this point almost unheard of in the markets outside of, let's say, April, for the markets to have the temerity to go down 3-4 sessions in a row. Kind of wild. S&P, as we're kicking off the show, off about 0.5%. The Dow off about the exact same percent. And actually all three of them hanging out right around 0.5%, which has been kind of interesting to watch. The NASDAQ has had its teeth kicked in earlier this week, and even yesterday was selling off pretty hard. Did manage a nice little rebound towards the end of the session. So if you came in towards the end of the day, you might say, what's going on? Not much is going on at all, but we had a lot of intraday downside going on. It's just been an aggressive kind of body blow, especially to the tech-heavy NASDAQ. You know, I say it a lot. The market gods have been pretty generous, but every once in a while they demand their pound of flesh, and they're coming for their offerings this week, listeners. That said, things aren't falling out of bed. Vol is getting spicier, but not quite perhaps as spicy as you might expect, given, you know, everything else that's been going on out there. As we kicked off the show, VIX cash had ticked up to about a 16 3/4. So that's nothing to sneeze at. It's up about 1.5 points from where we were on the Monday show. Seems like it's retreating off that high as we speak. We'll see if that continues throughout the duration of the show. Excuse me. And our old pal VVIX hanging out at 100, up about 2 points from the last show. If you're listening to Vol Views on Friday, you heard our buddy Ewan Sinclair talking about VVIX and saying, even though, you know, overall vol levels are low, VVIX still kind of stubbornly high, which is probably why if you're out there looking at VIX options and you're saying, man, those puts are a little bit juicier than I expect to pay for them in this environment. That's one of the culprits right there. VVIX remaining, I should say, stubbornly persistent around the par level, which maybe shows us that perhaps there are some other shoes yet to drop, or the market is concerned about some other shoes dropping. Either way, interesting stuff. Let's go around the horn. I should get to him first, probably, because I know he's got to get on the horn with his cabal immediately after his segment, because clearly they're not doing their buying diligence right now. Mr. Uncle Mike, what's up with your cabal, sir? Why aren't they buying it all up?
Well, I think just with what we have going on, it's just a simple pullback. We have had such the run. At some stage, we're going to have a little bit of a pullback, and right now we're getting a little bit of a pullback. No question about that. What I'm excited about is that we have had chances to buy puts at higher levels and sell covered calls at higher levels with the new expiration cycle that just came in earlier this week. So I think if you can continue to do that with a lot of your more shorter term stuff, then you can end up in a pretty good spot over the long haul. You're never going to sell the exact high. You're never going to buy the exact low, of course, as we all know. But if you can be consistent with what you're doing with when the markets go higher, you can roll your puts up and maybe sell covered calls at higher levels, things like that. There's definitely a lot to be had in the marketplace, in my opinion. Now, for the stocks that you're just sitting on and you want to wait for years and years and years, then I would say continue to wait for years and years and years. Buy and hold means buy and hold if that's what you want to do with it. If you're going to try and act out when certain AI stocks go down significantly, like Palantir has a little bit this week, as one example, then your buy and hold is not really buy and hold, and you become someone who is just trading on emotion, and that's something that you don't want to do. Now, if you're hedging Palantir in some way, shape, or form, whether it's part of a group and you're hedging the group of stocks as an index with an index put per se, that's different. But if you are just planning on holding it, then you really just need to stick to your guns and hold it unless there is a reason for why you wouldn't want to hold it, besides the fact that it's making you feel bad when it goes down a little bit. So that's kind of what I'm looking at right now. Of course, we have some pushback between Putin and Trump, and the Rocky IV battle, as we called it, continues to rage on. Kind of, sort of. We continue to have some pushback from the European leaders who want, they're saying it. So there's always headline risk, and we could easily be plus or minus 200 points in the S&P with one tweet. We all know that. So we need to be prepared for that in any way, shape, or form with which we can. And bottom line, more sellers than buyers, kid.
Uh-oh. The cabal is not doing its job. I think maybe they're just spent. They spent all their bullets buying it all up last week. Now they have to reload the gun. So we'll see. We'll see what Uncle Mike's cabal, what business he can get up to while the Flowmaster and I get down to our business. Many times he has managed to turn the market during the show. We'll see if he can pull off that trick again. As we head on out to the Flowmaster, as he's busy just devouring $2.50 fried Oreos at the state fair, he may have been distracted from the flow. I get it. Fried Oreos are quite distracting. But Mr. Flowmaster, sir, what's been catching your eye on a mostly red day, or red week really, out there, and a little bit of green on the vol screen again, kissing a 17 handle right now? That's kind of interesting.
Yeah, it's as Mike mentioned, I think we are seeing a pullback, right? We're we're still up 8% year to date in the S&P at least. So I think that might be one reason that nobody seems to be getting spooked. It's still basically a very orderly decline. And I was not trading yesterday, but I went back and reviewed some of the fireworks, and it really is in some of these exciting names, Palantir and Nvidia. In fact, on the kind of trade of the day list from yesterday, the top 5 big winners are all call buyers in Nvidia and Palantir off of the bottom. So, I think this is a time where some people are taking advantage of the big swings. There's a lot of discussion about dry powder in the institutional circle, and this is kind of these pullbacks. You quickly do seem to have people jumping in, also because we know, at least on the retail side, buying the dip really has worked. So I think it's very healthy. When I start to get text messages from my youngest brother, who's a Robinhood trader and has a lot of these meme names, and he's starting to panic, that's usually a very good sign that we're near the bottom. So on those style names. So I think I think I've said this before. When markets are just trudging higher, it's actually kind of it's a little bit boring, right? Kind of anything you buy is gonna go up, and you're gonna think you're a good trader whether you are or not. when we get kind of these sideways markets, that's really when options are the most useful anyway, right? It's there are trades for sideways markets. There's trades that you can put on, in kind of a pairs combination, getting long one and short the other based on a view that you have, and then all along the while there's some of these short dated 0 DTE style trades that you can also kind of overlay. So lots to do, and I think it's very healthy when we kind of get markets that are choppy. We're not seeing any signs of panic. You can tell from the VIX and from VVIX. People are starting to notice it's no fun to see the market go down, but at the same time, I think we had a lot of people talking about how overextended we were to the upside and overbought, and a lot of hand wringing over the concentration of the top names in the S&P really dominating, and that's not the healthiest sign. So weeks like this are when that kind of gets recalibrated a little bit, take some wind out of these super mega cap high flyers, and let the other stocks play for a while.
I like it. I like the Henry's brother meme stock indicator. We got another new indicator to add to the bunch. So we'll be checking in with you, Mr. Flowmaster. And when your brother is freaking out about meme stocks, that's when we know to dive in with both hands. Is everybody else diving in with both hands in the world of options today? Well, let's find out, listeners. A little bit of red on the screen, a little bit of green on the vol screen. That can usually lead to a little bit of paper. And that's pretty much what we're seeing out there right now. VIX already north of 500,000 contracts, 531 to be precise on the tape out there in VIX land. So nothing to sneeze at out there in VIX land. If you're wondering, by the way, this is actually, I do believe our producers have made this a subject of a flash poll as well, because an interesting trade going up, our biggest print of the day, 52,000 of the DEES 15 puts. That is your hot option in VIX right now, listeners, going up for right around 24 cents. And that one kind of made me stroke my chin and say, because I don't hate the duration going all the way out to December. You could maybe quibble with the strike selection. The price is maybe not terrible for all that duration at the end of the day. Again, the strike is a little bit out there. We've debated in the past whether 15 is really doable. If there's a time of year where you probably maybe want to buy a little 15 strike puts, it's probably in that seasonally weak holiday period. So kind of interesting stuff, which made me stroke my chin and say, which of course means it's the perfect fodder for a flash poll. We're asking you, hey, 50,000 of these bad boys going up for 24 cents. You know the drill. You want to buy them or you want to sell them. 80% of you right now, again, it just went live a few minutes ago, so this could evolve, but 80% of you right now want to buy them. I think I'm kind of with you. I think if you put a few of those in your back pocket for a rainy day, there are worse things. You're getting a hell of a lot of duration for 24 cents, usually a seasonally weak period as well. Now, that said, one tweet could change the game, of course. We all know the drill. But not terrible. Not a terrible one. I'll keep an eye on that one. We'll see what you folks decide. Maybe we'll commit. If you folks want to buy it, maybe we'll buy some on oddities. How about that? Just for some fun. Also, what's up there for number 2 up there today? We got a interesting dichotomy of paper in VIX land today, because number 2 is going completely the other side of the spectrum, going to the Jan 50s, 25,000 of those bad boys. That is opening paper. Looks like against a ratio, if I can find the other legs, I believe it's the Jan 20s, but it's not even 1/2. It's a much lower ratio than that. Jan 22s going up for around 360 against the 50s for 86 cents. And again, it's at least, I think, a 1/4 ratio, somewhere in that range. But selling, obviously, the 22s, buying the 50s. So getting back to our old ratio friend, that's a pretty wide ratio, but we all know how the upside in VIX works. You start blowing past that 22 handle. You might feel some pain on the 22s, but you're going to feel a lot of love on those 50s pretty quickly. So intriguing stuff out there. You like that ratio, listeners? 22-50. Somebody does for size out there. Speaking of size, SPY looking pretty active right now as well. 5.3 million contracts already on the tape in SPY. So that's a pretty hot day. Again, this is supposed to be the dog days of summer. We're supposed to be doing nothing. Everyone's supposed to be waiting today for Jackson Hole. But apparently not. Apparently we're putting up some paper. ADV 8 million exactly in SPY. We could hit that, maybe not by the end of this show, but certainly by the end of TWIFO at this rate. So interesting stuff. The S also saying, hey, don't forget about me. 2.3 million contracts on the tape. That's a pretty hot day in the S already as well. The ADV, 3.8 million. So seems on track to hit that level today as well. Small caps have been just shot out of the gate with a cannon, especially last week. They're putting up 1.5, 2, 2.25, almost 2.5 million contracts some days. Just banger times out there in small caps. Kind of retreating off that a little bit, but you know what? It's off to a good start today. The ADV has been elevated all the way up to about 1.4 million, and it's already over halfway there, 760. So has a good chance of hitting that elevated ADV today. So small caps maybe get a little bit of the bit in their teeth again. And you know, the index to watch this week, I've been saying for a while, has been the Qs. NASDAQ has just been taking body blow after body blow. Then, of course, yesterday, aggressive body blows. Then the old whipsaw action we saw earlier in this year coming back to play. So a lot of wild stuff going on in the Qs. That's leading to some paper already. 3 million contracts exactly on the tape in the Qs. So a banger out there, the ADV 4.2. We could hit that by the end of the show maybe. So just wild stuff out there. Have you been slinging some of any of the old tech-heavy NASDAQ listeners? If so, hit us up. Let us know as we keep on rolling. Looks like our put poll just changed. Now, a mere 2/3 of you want to buy it as opposed to 80%. 33% want to sell them. I can see arguments for both, obviously, but intriguing stuff out there. Speaking of intriguing, is it intriguing on the single name front? The answer is it's decent. It's respectable. If you've been listening to our newest addition to the network, which is pretty much this segment writ large into a show, then you know last week we were lighting up the tape. 1 million contracts, or pretty close to it some days, to break into the top 10. That is wild paper. We are not on pace for that today, but we'll see. Maybe the worm will turn. Cost you 306,000 contracts to break into the top 10 right now. That gets you to our old pal, the Amazonians, giving back to the market gods today, off about $3, or about 1.33%, trading a little bit shy of 221. Out there for the number 10 spot, Amazon. Number 9, Intel. What is up with this name? They love it, they hate it, they love it, they hate it. Is DC going to buy a piece? Is SoftBank going to buy a piece? Wait, is everyone going to buy a piece at quote-unquote discounted rates? A lot of news going on in my old stomping grounds. Number 9, Intel, 324 on the tape, trading 23.25 off a quarter today. Of course, you know, if you go back about a week and a half to last Monday, they were trading $20 exactly. So they still are on a good run, listeners, even if they are off their recent highs of about $26 and change out there. So this was kind of just a wild story, going into DC hat in hand, asking to sell a piece to the government, then coming back maybe with that, but also with a piece from SoftBank and everything else. Just wild stuff out there for the former tech giant that is Intel. Speaking of giants on the retail front, this is big box retail week on the earnings front. So we're getting a lot of insight there. We had Home Depot, we had Target, now we got the big boy, we got Walmart coming in. The street not liking what they're hearing. 97.5 off about $5 or about 5%. Obviously, tariffs are eating into their profits, but they still are looking decent out there. I think they're also stealing some share from Target, which of course is the big gain between those two out there. Either way, the street not liking what they heard from Walmart today, off about $5, putting up $3.55 on the tape for the big blue box. We got to number 7, AMD, 163, off about 2.25 or so, about 1.25%, putting up 371,000 contracts on the tape. So it had a really good run for a while there on the back of Nvidia's trip to DC. Some folks maybe are questioning the ability to maybe sell chips in China now, which is maybe to blame for some of this turnaround, because over the last 5 days, the stock has given up nearly $17 or almost 10%. So this is one of those things where DC giveth and perhaps taketh away. And of course, it was 163 even at the beginning of August, right before that big trip to DC by Nvidia. And guess where it is again today? 163 even. So if you look at it from that perspective, it's a whole lot of Sturm and Drang signifying nothing, listeners. And that's pretty much what's happened out there in AMD. Back to Unched. Number 7, 371 on the tape. Number 6, the Fruit Company. This one moving maybe a little bit closer back to its par strike, giving back some of its DC gains, shall we say. Number 6, Apple, 418, trading right around 224, off about $2 or almost 1% today. You know the story. It went down to DC hat in hand and got a nice boost in the stock in return. This is another one that has since given up a good chunk of that over the last 5 days, off about 10 handles or about 4%. Of course, this is not the same deal as AMD. If you go back to the beginning of August, before they made their trip to DC, they were trading right about $200, 203. So they still have $20 to go to erase that. So they still are looking pretty good. Either way, number 6, the fruit company Apple, 418. Number 5, open. It's an open question where this one's going to fall in our top 10 every day. This certainly makes it wild. Have you been trading this one? Are you just buying the underlying? Are you buying calls on it? Are you overriding calls against your stock? What are you up to out there? I know we did a poll earlier this week, and nearly half of you, like 46%, said you're just not touching this name. It's too crazy. And I could certainly see an argument for that as well. It's open, 479 on the tape, $3.50 again, up 30 cents. So we're right back at it again after seemingly giving up the ghost. It seemed like it was locked below $2.50 a week ago, $2.25. It got all the way up to 4 and change recently. It's been a wild name. I'm sure Henry's brother probably has a ton of open in his back pocket as we keep on rolling. Number 4, this used to be a perennial top 10er. We haven't talked about it in a while, but they are back. They are back with a vengeance. It's NIO. So let's talk a little Chinese EV, shall we? $5.50, up 50 cents, or closing in on 10%. Nice little pop for them. It's like they've had a good month. They're up about $1 or 22%, which is not a bad do for a good old NIO. Again, we haven't talked about this name in quite a while. Looking pretty good today. 543 on the tape. Number 3, Uncle Mike was just talking about them. Palantir, 155.25, off about $0.75. So not a huge move for them, or 0.5%. If you look yesterday was the wild one, selling off to they might have even broken 140 or gotten pretty close to it before rallying all the way back. So it was a wild one. Yeah, I got 144. I think they were threatening the 140 strike, but it looked pretty I know 140s were trading on the put side, which is kind of wild out there in Palantir. But that said, 155.5 today, putting up 750,000 contracts. If you had the cojones to step in front of that freight train and buy calls yesterday in Palantir, you're looking pretty good, even if you are giving a little bit back today to the market gods. And then number 2, back in its usual spot, all is apparently right with the world again, is Tesla. 319.5, off about 4 1/3 or 1.3%, putting up nearly 1 million contracts already. So a decently active day for Tesla. You know the deal. More sellers than buyers today. There's stories aplenty in Tesla on both sides of the tape. So 935 for Tesla number 2. That means Nvidia number 1 also giving back some to the market gods today. Trading 174, even, off about 1 1/3 or about 0.75%, putting up 1.3 million contract. This is another one that has kind of given up some of its ill-gotten DC gains over the last 5 days, off 4% or about $7.50. If you go all the way back to before their trip to DC, so August 1st, they were 173.75. They rallied all the way up to mid 180s, 183, 184, somewhere in that range. Since then, they have pretty much given a lot of that back. So they're right back to, they're up a little bit. They were 173.75. They're about $0.50 above that now, 174.25. So all of that Washington largesse appears to be gone, at least for right now. We'll see if there's another leg to come or not. But it seemed like it was just popping bottles in Chipland for a while there. Then now apparently the worm has turned. Looking on the rest of the calendar right now, we got some hot stuff popping off. Like I said, it was big box retail this week, so we heard from Home Depot on Tuesday, Target on Wednesday, the big cheese, the big blue box, not the big blue, that's of course IBM, but big blue box retailer, which is Walmart out there. We got Zoom after the bell if you're still into such things. Intuit and Uncle Mike's preferred clothier, Ross. He likes to dress for less, listeners. And then Friday, we've got BJ's, which I've never been to. I've never been to a BJ's. I've never been to a Sam's Club. I've been to Costco. We have one here. But I've never been to a BJ's. How do they compare? Let me know, listeners. Is one wholesale club better than the other? I don't know. Are you looking at the earnings tape right now? Walmart obviously popping off this morning. Interesting move out there because they were pricing in about 4.5%. And as of this report, they had moved about exactly 4.5%. I think that had ticked up to about 5% when we checked them a few minutes ago. Let's go out and see. Yeah, it was about 5%. So pretty much in line with its straddle. So that in and of itself, for all, the dire headlines, oh, Walmart missing whatever, that's exactly what they were pricing in. So not exactly super surprising. If you're looking ahead to Intuit after the bell, name we haven't talked about in a long time. Let's see, they're right about $700 when we ran this report. They were pricing in about $40.50 in the past. They've moved about $40. So about in line. Zoom, again, like Peloton, one of the big darlings of the pandemic, kind of come on hard times since, but $72 and change, not looking bad going into this report. They were pricing in, get this, 2 3/4. That's interesting because in the past they've moved $4.10. So they're looking for a haircut on the earnings vol, which, if there's any trend for the last cycle and this cycle, it is don't do that. Buy all the earnings vol. So that's kind of interesting. Maybe a deal to be found on Zoom vol. BJ's, again, not a stock I watch at all. 22nd before the bell. 22nd, what a terrible day. Who would want to celebrate anything on a day like that? 107 in the third. About 660 is what they were pricing in. In the past, they've moved about exactly 660. So about as sexy as you'd expect for a straddle on a wholesale club. Let's go out to next week because that's where some of the big dogs are popping off, including some company called Nevada, I believe. I don't know how that's pronounced. Nvidia. I'll let you figure out how it's pronounced, listeners. But they are the 27th after the bell. 175.5 is where they were trading when we ran this report. They were pricing another interesting one, $11.07. In the past, they've moved 13 1/4. Interesting. A discount on Nvidia vol. Is that a fire sale? Is that worth buying? Or is that past earnings move so inflated you just can't buy it anymore? You'll choke on it. That's wild. I'll need to dig into that a little bit and see how that's playing up. Let's also look at Snowflake really quickly. They are 27th after the bell. They kind of on again, off again, hot and cold, hot and cold. Market loves them. Market hates them. Not sure what phase they're in right now. Trading right around 195. Pricing in 21 1/3. In the past, they've moved 26.11. This is another one with a big discount on the earnings vol front, which, again, if you don't believe our numbers, talk to just about anybody. We had Dr. Vix on our Vol Views show. He was talking about earnings deals. Ewan Sinclair coming on talking about how earnings have outperformed these last few cycles more than anything else he's seen. We've been crunching this data for a while. We have a lot of data, listeners. We've never seen cycles like this one, let alone the previous one. So usually everyone asks us, should I buy or should I sell premium going into earnings? We always say it's just a crapshoot. It's a coin flip. These days, the answer is buy it, at least for right now, until this madness ends. That is the way. Looking right now, the season hanging out at a very lofty, some might say ridiculous, 130%. That's blown away our long-term average of 119%, which is already ridiculous. And if you don't know what any of those numbers mean, check out our data over there on the website. It will inform you. Speaking of data, it is time to unleash Uncle Flowmaster. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Let's get down to business. It's Thursday. I know what you folks want. What you're paid your admission to get. You want some Uncle, easy for me to say, I can't even say it. We want some Uncle Flowmaster goodness in your life. Well, if that's the case, let's kick it off in one of his favorite names. He's obsessed with this name. I think he told me prior to the show, 98% of his personal holdings are in this one name. What is it? It's our old pal Unity Software, $36.50 today, up about 2/3 of a buck, or nearly 2%. You know the deal on Unity. It's been a hell of a year. Up nearly $20, about 19 1/4, or a whopping 111%. And aside from a little bit of a downturn on April 8th, it's been pretty much straight up the entire year, and certainly a hell of a run from July till now. $24 all the way up to 36.50. Mr. Flowmaster has been painstakingly cataloging the saga of the tape out here. And he was waiting. I believe you teased us on the last show, Mr. Flowmaster, that you were eagerly awaiting the release of data from the 13F reports on Unity. So you could see what the hell's going on out here. Mr. Flowmaster, what'd you find for us?
Well, yeah, I am kind of obsessed with this name, and I get to be like a detective, which is fun using the options data. And so I've mentioned before, we use the 13F filing reports, which are SEC mandated reports that managers and trading groups have to file every quarter. And not only do they show their stock holdings, these come out, and that's why you see the headlines like, "Oh, Buffett got into XYZ." That's the same reports that are being analyzed. But for options, it's a little bit harder to figure out what's going on, and you also have the issue with they're just basically declaring that they're long calls or long puts. You can't tell what strike, what contract. But in Unity, which in April we saw 4 10,000 lot blocks of December 40 strike calls bought back when the stock was 24-ish, and we talked about it back then. I decided it was worth a little long stock position, and lo and behold, the stock does finally spike. It's at $36 now, as you said. Those calls made the buyer a good chunk of change. I haven't done the numbers lately. The positions are still open, and so I was waiting for these 13F filings to hit at the end of. In the middle of August for the end of June quarter end, so that we could see specifically who had 80,000 of calls in Unity, because it's a concentrated enough position that it's not going to be held by a whole bunch of different filers. And weirdly, I still can't tell you, and that's why I get to be a detective, but I haven't solved the case yet. We see plenty of calls being disclosed, but it's the usual suspects that have the biggest positions. Susquehanna, Citadel, Jane Street, these are the big liquidity providers. They tend to have the largest inventory in general. What I was expecting was for some buy side, hedge fund that we've never even heard of to kind of pop up in the top 3 or 4. And I don't see it. And I'm not sure why. That the mandate to file is pretty clear. However, if you're not managing assets, you don't have to file. So it's conceivable that one holder didn't have to disclose what they had, or maybe somebody just didn't file because they didn't file. So I'm out of this. I made some money in it because that stock got a good jump out of it. It is actually very busy in there today as well. I think the total call volume is 126,000 contracts, but it's mostly August being rolled around. So some August 29th, 37 halves. So still not clear what's going on in Unity, but I'm going to keep on it, and I will keep you updated.
All right, someone may be dodging some filing requirements. So interesting stuff. Maybe the regulators should take a sniff, sir, as we keep on rolling out to the next name. This is a newcomer to the Odd Block. I remember a name like this. This is Blend Labs. Are these the folks, sir, of the infamous Will It Blend YouTube videos? Did they go public? I might buy that stock. That'd be fun.
Yeah, I'm not sure what they do. They sound scientific. They're categorized in the technology space in our data. This one showed up on my list. It's got a few of the things we like to look for. It's a cheap stock. It's only $3.33, and that's being up 11% today. So it actually opened under $3, and it showed up on my scanner because of a kind of a high call to put ratio, about 12,000 calls versus 60 puts. So what does that actually work out to be? BLND. That's a call put of 192 to 1. And it is pretty concentrated. It's a lot of the November 4 calls and the October 5s and the November 5s as well. And these are trading for 20, 30 cents, but they're all buyers. It does stand out to me as I said, we like to look for cheap stocks that kind of have the potential to get squeezy or to kind of catch the meme stock train. In this case, it doesn't look too hard to borrow. I show it at about 40 bips, so it's not the cheapest to borrow, but it's borrowable. Worth watching. I really don't know what they do or if there's any catalyst around the corner. Stock's been between 2-ish and 5-ish, so it's at the lower end. And when I see 30 and 20 and 30 cent call buyers, I do pay attention, especially if it's big for the stock.
Yeah, for a name like Blend Labs, that could literally imply anything. There's a million different things. It could be a small biotech. It could be the Did It Blend guys. All sorts of fun stuff. They can make blenders. They can make high-end blenders. But no, they are a cloud-based software platform for financial institutions. So there you go, Mr. Flowmaster. They're right up your alley over there. Apparently, they're on the lending side. So they are technically a fintech. You'd never know it by the name like Blend Labs, but an intriguing name out there, listeners. And just really quickly, since I got caught up in the fun out there, trading 3 1/3, up about 34 cents or over 10% today. On the year, though, it's not been a banger year. They're off about 3/4 of a buck, or nearly 19%. They rallied as high as about $5.50 back in November of last year. So from that level, they are off quite a bit, about 220. So interesting stuff out there in Blend Labs. And let's hit. Well, I'll tell you what, we'll hit one more, and then I have an interesting conspiracy theory to share with you all that our listeners shared with us. But let's go out to Select Quote, listeners. This is ticker symbol SLQT, trading $2.50. This is the time. $2.50 stocks are apparently all the rage these days. This one, $2.50, up 75 cents or 41%. My goodness. They had a good earnings number, I think, to put it mildly. Revenue soared 55%. Wow. Absolutely, absolutely wild stuff out here in Select Quote. We have another open on our hands, listeners. We'll see this one just roaring back to life. Even with that big move today, it is still off nearly $1, or about 25% on the year. And then it got as high as almost $7, $6.86 on Valentine's. This is the name that literally topped out on Valentine's Day, nearly $7. If you bought it on Valentine's Day, you were wearing it almost instantly. It was $4 again by about a week later, and it's been selling off ever since. Obviously hit its nadir of $1.62, not on April 8th, but actually in August 4th. So from there all the way back up to pretty much where it is right now. In fact, the lion's share of this move just coming again just overnight after this announcement. So wild stuff out here in Select Quote. And what do we find out here in Select Quote? A decently sized call spread. So it looks like they're not just chasing the upside, they're actually being a little bit, dare I say it, responsible in this. Our first blush was maybe someone's rolling, the stock is exploding, but it's opening actually on both legs. So we got somebody coming in, going all the way out to April of next year. They're buying the twos. Now you could argue in and of itself, buying the twos for $1.13 when the stock was itself, aka the forever call, $1.87 12 hours ago. That's maybe a conversation you could have. But nonetheless, they bought the twos. The stock was $2.71 at the time, so they had a little bit more meat on the bone there. They had 71 cents of intrinsic value, at least, to play with there. And they turned around and said, you know what, I'm going to take some of that off the top. I'm going to sell the fives as well. Did the whole thing 7,500 times again. So doing it for $1.13 and 20 cents on the upside. So again, shaving 20 cents off. If it gets to $5, I think they'll probably be happy letting some fly out there, especially if you have it from $1.86 or even lower. Mr. Flowmaster, we always talk about crazy YOLO calls on these cheapy names that are exploding to the heavens. I thought it was interesting to see someone taking a, dare I say it, more precise and measured approach to one of these exploding names. So what do you think?
Yeah, that is an interesting trade. I'll tell you, I was looking at some of the pre-earnings flow. It does look like somebody might have bought about 500 of the SEP2 calls for 20 cents yesterday that are traded around 70 cents today. So they made some money yesterday. I mean, today's that vertical is a lot bigger, 7,500 times. I'm not too sure. I love the basically 1 to 2 risk reward, right? So I'm not too sure about that unless the Aprils are closing or something. It doesn't look like it though, because not that much open interest. I don't know. It's interesting. I mean, it is a fintech, a little bit like the Blind is too, as you said. It looks to me like they're in the mortgage space or something with, trying to offer some technology services that make that market more efficient. So interesting, but yeah, I mean, it's a heck of a move today, that's for sure. I don't think this, it looked like about 25% was priced in on the straddle, maybe. But that's an interesting one. I don't know if I love a 3-point spread for almost a buck.
Yeah, I'm not saying I love it either, but it did catch my eye you don't see that too often. You don't see someone doing the vertical as opposed to just, just YOLO in the calls. So for that in and of itself, let alone the size and the fact that we haven't talked about select quoting maybe ever, I don't know. I thought it was kind of interesting to bring up. But listeners, would you do a $3 vertical for essentially close to a buck? I mean, you are limiting your upside there, but also you're taking away some of your costs. I mean, cost is a thing when you're paying $1.13 for a call on a stock that was just $1.80 yesterday. So just something to bear in mind. But speaking of bearing things in mind, I want to get to this because it's a fun little conspiracy theory that one of you folks sent in. Let's get to the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Now let's do actually a twofer here in the mail block. First off, I want to get let's update really quickly on our poll for the flash poll for the VIX 15 puts. 50,000 of them going up 24 cents. Buy or sell. Now we're down to 60% want to buy them. 40% want to sell them. So our audience a little closer to split on these bad boys. Like I said, I can see an argument for both sides. I probably would lean buying just for the duration and for some of the fun. But intriguing stuff. But our actual question of the week is, again, the $1 million question that's on everyone's mind right now. So we thought we would ask it quite simply, are you comfortable buying and holding the SPX right now? So let's go out to our resident permabull. He's always comfortable buying and holding the SPX right now. Mr. Uncle Mike, what are your thoughts on our question of the week? And then also, more importantly, which way do you think our audience is going?
I mean, if you're buying and holding, there's no better buy and hold asset in the history of planet Earth than the SPX or than the S&P 500. No other major asset class has outperformed stocks over the last 100 years. We've had a great run, and there's reason to believe it will continue to go higher. So for buy and hold, I couldn't ever feel more comfortable. I guess you could say I can't wait till tomorrow, because tomorrow I'll feel even more comfortable buying and holding the SPX than I did today.
You couldn't ever feel more comfortable, even though you're short-term cautious? You wouldn't feel more comfortable if we were, say, 500 or 1,000 handles lower?
Well, I mean, no, I'd feel just the same, because I'd be more excited. But if it's for comfort, we're talking about comfort, not excitement. There is a difference between comfort and excitement, I would say. But for the assets with which I play the long game, I play the long game, and the SPX has had an amazing long game. So yes, I'm short-term cautious, but in the buy and hold section of client portfolios, we're buying and holding.
Speaking of Uncle Mike's level of enthusiasm, his clients are pretty enthusiastic as well. I appreciate you sharing that your clients support you, Uncle Mike. We had one of them writing in to say, FYI, I like Mark and Andrew. You know, when he starts off with that, he's gonna slam us in some way. He says, I think they're great on the OB podcast. However, I believe there is some collusion between them going on with the trivia. I think you're getting robbed. I'm always in your corner with the trivia game. Let them know there are listeners paying attention. Uh-oh, not just Mama Lobster. Now we've got Uncle Mike's clients. He says, of course, I appreciate your market commentary. Enjoy the weekend. So Uncle Mike, how much do you pay your clients to try to strong arm the results of the trivia contest, sir?
I will keep this client anonymous, but you would be absolutely shocked if you knew who this was.
All right, I will just leave it at that as we keep on. So some folks accusing me of skull. I get it on both sides, which I guess means I'm running a nice, fair down the middle game, because Mama Lobster is mad at me. Your clients are mad at me. Everyone's mad at me, which means I'm running a good game. But let's go out to the Flowmaster. I want to get his thoughts first off on our question of the week. Then I do want to share this conspiracy theory that was sent in by Woody. Very relevant on the options front. But first off, Mr. Flowmaster, the $1 million question, are you comfortable buying and holding the SPX right now? And B, what do you think our audience is up to?
The question is, the timing is great. We had our interns just finished up last week, and one came into my office and he said, "Hey, I just have a question." And this kid is like 20 years old, and he said, "What should I do with the money that I made during this internship?" Because apparently Cboe pays our interns pretty well. And
damn, they get paid, man. I had to work for free. What the hell?
I know, and we're not even allowed to like tell them to go get us a latte. I said, listen, put it in the S&P in like SPY or something similar, and do not look at it for the next 10 years. And I said, don't even write calls on it. Just when you have a good amount of runway ahead of you, there really is nothing better than being invested in U.S. equities. Don't get fancy. Don't try to pick your stocks. Don't even try to pick your sectors. And I told him, I said, look, if you want to punt around, fine, take 10% and put it in a little trading account, and you can play a Robinhood a little bit. But I said, in general, you just want to be invested, and there's some overlays and things which I think at some point in your life start to make some sense to do. But that's it. The S&P, U.S. equities really is. It's an amazing place to invest, and we do a lot of international work, right? And we go out and we work on analytics for other markets, right? Like Cboe Data Vantage now has analytics on about a dozen European exchanges. So if you want to see quotes from Eurex or Monep, you can. But the truth is, half of these meetings we have, people end up saying, well, what we really want to do is invest in the U.S. and route orders to the U.S. options market as well. And that's why we're so lucky to kind of be where we are.
You think our audience agrees, sir?
I do. I'm sure they agree.
Our audience is giving a big middle finger to both you and Uncle Mike.
Oh, no.
Nearly 60%, 59.1% are not comfortable buying the SPX right now. 41% are. We'll see. That was even more bearish a day or two ago. We'll see how that evolves as the week evolves. But I want to get to this question. I was actually hoping to get to it earlier in the show, but for some reason, Meta, one of the few days, Meta didn't make it into the top 10 today. Meta having... Even it's off $10.50 today, putting up 265,000 contracts. Not enough to make into the top 10 today, listeners. But nonetheless, the headlines all over the place, and the big story breaking out of Meta today is that they are paying ridiculous sums to get these AI people to poach them from Apple and everywhere else. Some talking generational wealth, paying some people $100 million to come work on AI. So people are just flabbergasted as to what possible skill set or ability or knowledge could possibly be worth generational levels of wealth to pay for. And that's one of the big things that's going on at Facebook. In fact, they announced a hiring freeze today, maybe on the back of these rumors. Maybe they just can't afford to hire anybody more for $100 million. But this came across our tape this weekend, and it plays into the option side. I thought was kind of fun, listeners. This comes from our listener, Woody. He said, did you guys see this trending on Twitter this weekend? And he forwarded a link to a tweet from a guy who goes by Government Contractor on Twitter. And it's a long tweet. I won't give you the whole bits, but he says a low-level employee at a large AI company was there, and the conversation moved to these insane salaries that the top guys are accepting to go to Meta. And even more surprisingly, people are turning those offers down. And he said, according to him, people with access to the top-end models that the public can't see are using them to make a fortune in options trading. And so in order to incentivize them to go away from those models and come to Meta, that's why Meta has to pay $100 million a year, because these guys are printing money using their top-end AI in the options market. I thought that was just hilarious. Mr. Flowmaster, when you're not talking to us, you're crunching the flow. You have some insights behind the scenes on some of these models. What are your thoughts on this latest conspiracy? It's not their skill set. It's they have to pay them to step away from their ridiculously profitable options trading, sir.
Yeah, that's an interesting theory. Bloomberg has some pretty good podcasts where they've talked about some of these crazy numbers that are being paid to AI scientists. I don't quite see it playing out in the options markets. I mean, we do have record-breaking volume. I think August volume is running around 61.5 million contracts a day, even higher than April, if you can believe that. So, volume is certainly very strong. I just think if somebody was basically printing hundreds of millions of dollars using some sort of AI-based model, that we would have heard something about it or noticed it in the data one way or another. So I don't quite think that's it, but you never know.
Flowmaster gives a big thumbs down. Mr. Uncle Mike, what do you say? Are you buying what Woody is selling? Well, he actually wasn't selling. He just wanted to get it to our attention, which I had already seen. Other people had shared it with me. Uncle Mike, are you buying that they need to compensate these AI guys for their ridiculous amount of money they're printing using AI to trade options, sir?
No, because I don't. If they truly had AI that could do that, then they wouldn't have enough money to compensate them in a greater method. So you'd theoretically solve the national debt really quickly if you could truly do that. So I do not think they're doing that way.
I think one of those trades would come up on the Flowmaster's Trade of the Day newsletter, and we would all suss it out. So we haven't seen it there yet, but I love a good conspiracy theory, especially, too bad the Rock Lobster isn't here. He's Mr. Tinfoil Hat, as we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, are you buying what those folks on Twitter are selling? Do you think these generational salaries are to compensate for the loss of their ridiculously profitable options trading? Or is there something else afoot? Hit us up, let us know. But we have to go around the horn right now. Mr. Uncle Mike, we'll start with you, sir. What are you keeping an eye on until the Monday show? And then B, because we're coming up against it, where should folks go if they want to debate with you this great meta AI options trading conspiracy or anything else?
Oh, well, continuing to watch the S&P, seeing where we're going. If we are going to continue this pullback or if we're going to make another run at 6,500. We are only roughly 2% off the all-time highs. Watching precious metals. Bonds are selling off a little bit too today, so not a ton, but going to continue to watch that whenever we have stocks and bonds moving in the same direction. Usually the next day is pretty interesting from my experience. If you'd like to debate me on such things or looking for a financial advisor that delves in the option product, that actually loves the option product, go to stcharleswealth.com, book an appointment with me. Would love to talk to any of our listeners.
I got so excited talking conspiracies, I forgot to give our listeners a little bit of an update at the end of the show here. It looks like the sell-off mitigating somewhat. We're off about 1/3% or slightly more across the board. But VIX Cash still hanging out firm at 16 3/4, which is kind of interesting. Mr. Flowmaster, what are your thoughts and what are you keeping an eye on until your next appearance next Thursday? And then B, if folks want to check out all of the cool goodies you got cooking up over there at Cboe, including someday in the distant future, the Trade of the Day newsletter. Where should they go? What should they do?
Someday, when we release the Trade of the Day, that's when I retire. I'm going to be watching some of the macro factors. We do still have lots of noise coming out about the Fed, and as we all know, this administration, they do like to kind of take some sharp turns every once in a while. So, I would say, fine, the market's kind of pulled back a little bit, but vol is really very muted. But you do have to be ready for, any day something weird could happen. So that's what I'll be watching. And then some earnings as well that I'll be keeping an eye on as we get into September. For all of our great data sets, Cboe.com/RMA. And actually, one of the ones we just released, which is pretty exciting, is 1 minute intervals in that open close data set, which basically breaks out the customer buying versus selling and a number of other dimensions. Currently, it's for 2 of our exchanges, not yet for C1, which is where you'll be able to get SPX and VIX. But that actually is kind of a big step, because currently you have to wait up to 10 minutes to kind of get the definitive clarity on, like, that VIX block of 51,000 contracts today. If you wanted to know exactly which side was customer, which was firm, especially when it's a mid-market print like that, that open close is what people use. And to have it available within 1 minute instead of waiting for 10 minutes is a lot more transparency. So I'll tell you that VIX one I was actually looking at, it shows to me as a customer seller, but I'm getting actually some slightly mixed messages. The floor had to show that it was a buyer, but I showed.
They're selling the 50s.
Yeah, that's what they show up as. So.
Wow. Daring fellows.
Yeah, it's a little bit weird. Selling 15 puts. I mean, I suppose that I guess if they think it's just going to kind of stay choppy like this for the rest of the year, that's an okay trade. But,
the 15 puts. I think I meant the
15
50.
puts.
Okay, all right, yes.
No, sorry, and I might have misspoke. 51,800 bought by customer. A firm was the seller. So customer buyer of that trade, and that's what I mean in that data. It makes it nice and easy because that print happened when the market was showing 22.26 and it traded 24 cents. So it's very hard to know which side was which in that case. In fact, even based on the Cboe Theo value, it was right at value. But the data shows it was customer buyer. So that's 1 minute slices of that data is actually pretty neat and worth checking out.
There we go. Now we just need OCC to update OI more than once a day. And we're there. Then we got the key to all the data, listeners. If you want to check it out for yourselves, you know where to go. Cboe.com is the place to go to begin your journey. If you want to go to the Flowmaster goodies, Cboe.com/RMA is the place to dig into his stuff and everything else they have cooking over there in the land of Cboe. That's going to do it for us on the old option block today. Not going to do it for us on the network. Not by a long shot, because our producers love you and they hate my voice, listeners. I'll be back in a little bit, be joined by Kevin Green from the Schwab Network to talk all things futures, options, and spoiler alert, there's a lot to get to. Should be a fun time on that show. Then we'll be back after the closing bell to unleash Thor upon the markets, a.k.a. the Hot Options Report. Be interesting to see if some of these names we talked about today can make it onto the show, or will something else blow past them. We will find out. And then back again on Monday, another great episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.